All right. Good morning, good afternoon, good evening. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in this amazing Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. So let's get a little early participation. If you all can hear me loud and clear, let's do a quick sound check. Drop me a 1 in the chat. Let me know that you can hear me and that you are all ready to go. All right, Benita, I see that one coming in quick. JC, Tyrone, K, appreciate it. Thanks for all of you being here. So each and every day, let's make sure that we start with a strong foundation, taking massive action. Let's make sure that we are accepting all possible losses before entering a trade, preparing you for any outcome. Let's make sure that we center ourselves in body, mind, and spirit, assuring a balanced approach to trading. Let's trust in our education, strategy, trading skills, and intuition. And let's imagine our trades successfully materializing. We want to make sure that we obey our trading strategy, avoiding decisions based on greed or fear. And we never look back or stop once our trade has commenced. So I hope everybody is ready to take massive action this morning as we click out of here and take a look at the fundamentals to see what we've got going on today. So we will first move over to the Forex Factory and take a look. Let's go back to yesterday, Wednesday, right? So not a whole lot, but new home sales in the United States down a bit, right? We got crude oil inventories came in miss target. So we'll take a look at crude oil today as well. So Wednesday, fairly light, but coming in today, 5:30 a.m., we had the Bank of England Governor Bailey. Uh, he spoke this morning. Haven't had a chance to read up on that yet. I haven't seen anything, so we'll see what that was all about, and hopefully we can get something posted on that. Moving on down at 8:30. Okay, nice bright red folders here. We have the final GDP Q over Q for the United States, expected to come in at 1.4%. So we'll see if that comes in, right at, below, or above forecast. Again, that's at 8:30. We have unemployment claims as well for the United States, right? So the projected number is 236,000. So we'll see. Just keep in mind also later on today, right? I say here 9 p.m. President Biden speaks. We've got a debate going on this evening here in the United States between Joe Biden and Donald Trump. So we will see how that goes. Also today, we've got durable goods orders month over month, core and overall durable. And we've got final GDP price index. So, and then at 10 a.m., we've got pending home sales month over month for the United States. New Zealand, it's a bank holiday today. Japan, okay, at 7:30. We've got Tokyo core CPI year over year, unemployment rate, preliminary industrial production month over month. So continuing to watch the yen, right, as it is at a multi-year low. The Japanese yen, I know we've been talking about that a lot in regards to the Bank of Japan intervention, right? So that is still out there. The rhetoric is getting stronger and stronger for the Bank of Japan, right? But no moves yet. So we'll continue to watch the yen crosses. All right. So that's what's happening today. Moving on to trading economics. We've got the Eurozone economic sentiment eases. So the economic sentiment indicator, the Euro area edged down to 95.9 in June from an upwardly revised 96.1 in May and below forecast of 96.2. There was a broad-based sentiment worsening among companies, while the consumers were slightly less pessimistic, right? So the overall sentiment for companies more pessimistic than consumers, right? So eased a bit, right? we look at, GDP, interest rates, and sentiment is very important too, in addition to things like retail sales, right? So key fundamental data, as we are saying, hey, we have to watch, right? What the data is from the last ECB meeting where they cut rates and then said in regards to forward guidance that they're going to be data dependent, right? So we have to pay attention to the data, right? Um, so far with the few reports that have come after the meeting, right, the data is pointing towards the possibility of more cuts for the euro, but we'll continue to watch it. Let's see. Riksbank lead maintains a steady rate. Yen slumps prompts fresh verbal intervention, right? So, like I said, the rhetoric out of Japan is getting stronger and stronger, right? So we'll continue to watch that. So just a note, right? Japanese yen depreciated to as low as 160.87 per dollar, the weakest since 1986, right? Before recouping some losses as finance minister uh, Sanucci Suzuki issued, let's see, issued more warnings against sharp currency moves. He reiterated that sudden one-sided yen moves are undesirable and that authorities would take appropriate action when necessary. So they have always said that is not necessarily um, the currency price, right? So that 160.87 that they pay the most attention to, which they do, but they said their primary focus is on the volatility, right? And sharp moves. So they are speaking out against that, giving verbal warnings. So that's that. Any questions on any of the fundamentals?
No.
All right. I appreciate it. Give me 1 second here. All right. Ryan, good morning, sir. How are you?
Good morning, bro. I'm doing well, man. How about yourself?
Doing pretty good. Doing pretty good. You holding up, man. You're the busiest man in show business right now.
Man, listen. It's been a wild 2 weeks, man.
Yeah, for sure. I know you've been working hard, right, on the projects you've got going, right? But we know hard work pays off, sir. So,
Yes,
in the
sir.
meantime, right, have you been able to have your eyes on anything fundamentally?
Um, you covered pretty much everything. Just watch out for this weekend.
Hmm.
Um, with the Bank of Japan, price is definitely, as you talked about, way overextended. Um, they like to intervene when the market's closed. So, be it a holiday or a weekend. So, um, we could potentially see that happen this weekend, especially if prices continue to track to the upside. So,
All right. All right. So we'll continue to keep an eye on the yen, right? So the yen watch party continues. So sure. So we'll take a look at it. The dollar index, right, held around 106 on Thursday after reaching a 2-month high in the previous session, underpinned by hawkish remarks from a Federal Reserve official and the central bank's cautious approach towards interest rate cuts. Fed Governor Michelle Bowman said that inflation will remain elevated for some time, so it's not yet appropriate to start cutting rates. The Fed has repeatedly indicated that it needs more confidence on the inflation outlook before easing policy, in contrast to other major central banks like the ECB, SNB, BOC, which already slashed rates, right? So taking a look at the DXY, right? Overall, right? Looking at this weekly fib, right? Continuing to swing to the upside, and we've got resistance, right? At that 106.36 level, right? So it looks like we're trying to uh, head back there, right? Which we already had that level marked on the daily. We're getting some pullback today. Again, we've got some GDP data, things coming out today for the dollar, so we will see. And yeah, so we're at 98%, right? Overbought on the DXY, but continue, right, to make higher highs and higher lows. So we'll see if we see, you know, a deeper correction or whatnot, or we hold, right, for example, at this 105.82 level. So overall bullish, right? It looks like we're in a bit of a corrective phase right now, but looking for that dollar overall to stay strong. Any questions on the DXY, the US dollar? All right.
No, sir.
So we're
Nope.
starting to see, I appreciate it. So we're starting to see you know, some interest rate differentials come into play, right? Which is cool. Which is cool. We can roll with that. So I want to start out today taking a look at, because we know, right? We mentioned the S&B, the Swiss National Bank, right, came through with their second interest rate cut. So we want to take a look at some of these Swissy plays that we have talked about and have marked up. So I want to go through those. Taking a look at, we'll start out with the Aussie Swiss as we continue to move long. We're getting some corrective action now, but still looking for that to make gains to the upside. So here we're looking at the daily, right? You can see where it parked its last low. We've since taken out a high, and you can see here that coming into today, we're bullish with a bit of a pullback. So the question becomes, can we get through that 59.92 level? So we want to see if it can maintain the long play. All right. So here we are right now. We are on the 4-hour where we've made a U-turn, right? So we had the large correction off of the 80-20 that took out the A, but then we've recovered a bit. And we have now, right, we broke above that 200 moving average, broke above the cloud. Getting the correction now is fighting at 200, but we want to see that continue to push long. So I am still holding long on the Aussie Swiss. This pair likes to take its time, so we'll continue to watch it. Here we are now, right, on the 1 hour. So we've got a 50% pullback. It's tested that area couple times, right? So we've got past resistance acting as future support, right? So we're kind of in this zone, starting to continue to test our area here, right? So we got the bounce, and now, right, we are pulling back, right? So we'll see how deep price wants to pull back, but overall, just from a fundamental perspective as well, I am looking to stay long against the Swiss franc for the time being. Any questions on the Aussie Swiss?
No questions.
All right, moving on, taking a look at the CAD Swiss. So, okay, we had to break down ever since we had that pullback, right? We came into that 786 level up against that daily support at 64.33, and we have been pushing long, right? So I want to look for pullbacks and continuations, right? You can see here where we had this big, huge wick where price got rejected. You can see now we're back above that level. So we want to see if we can continue long for the push. So we're looking for pullbacks and continuations now. Now, when we come to this 4, right, this showed up after that deep correction as an 80-20. Okay, so if you plan on a 4, that's a beautiful swing. Okay, and we've got TP1. So what I'm looking for is I'm looking for pullbacks and continuations. If we continue to trend off that daily chart to the upside, we'll eventually take this 8 out off of this swing. So we want to see price pull back and continue long, right? So if it confuses you, right, having the multiple fibs running as we track that 80-20, you know, don't let it confuse you. Just take it off, right? So you say my overall bias is to continue move bullish, right? Then just run it like that, okay? And let's see if we can continue to stay long. Okay, so here we are on the 1 hour. So if you plan your 1 hour, you see where we already took the A out on the 1 hour fib, and we're moving long. And you can see here that we haven't gotten a correction yet. right, on this CAD Swiss. We may not. Right? So continue to watch that as that is in an 80-20 zone, but you can see how we broke down and then we pulled back. So just continue to watch it, see if we reach that D extension without a major correction. If we do, the fib will reset. But I am looking for pullbacks and continuations overall against these Swissy pairs. Any questions on the CAD Swiss?
No, sir.
All righty. Moving down to the
Benny,
Swiss. Yes,
I want to know if you can drop the cloud on that.
I can. Let me go back to it.
Thank you.
Mm-hmm. Mm-hmm. Uh, Yep. So we are well above the cloud, right? So it's just a matter of price breaks down on this next correction, or we move higher, right? So that's where we are on the one with the cloud. All right. That's that. So we're well above the 200, right? You got your crossover there between your 200 and your 50, right? So it's hanging above that 50 moving average. See if we could keep it long. All right. So that's that. Moving on to the Swiss yen. Take a look at the weekly. Okay. Just continuing to move bullish, right? Continuing to push bullish higher and higher and higher, right? Just continuing to run. Unbelievable, right? So we're into a D extension on the daily. Got a 382 pullback, and it's gone, right? D extension hit. And corrections are coming every since, right? Look at how, all right, when you map things out, we had that price ranging ever since that breakout on that switch in. Okay. 4-hour D extension has not been reached yet. Okay. But we got just about a 61.8 pullback up against that support, and it's just been running, right? It consolidated and then it just broke out. Right. So eventually we look for that 183 target to be hit on this 4 hours. So if you've been holding longs on the switch in, just continue to let it run. Right? Continue to let it run. That's that. Moving on down to the one. Okay. So current 1 hour fib, we've got a 236 pullback. Right. And we're kind of just hovering right now. Ranging. Stochastics in the buy zone though. Okay. So this isn't in any type of sweet spot to trade right now. Okay. So it just is what it is. So overall long, maybe we get a correction soon on the Swissy yen. So that's that. Any questions on the Swiss yen?
No, sir.
Continue to work hard. And once you get in a trade, you've waited so long, you've been patient. Let's work on making sure that we do our best to let our positions run to the target, right? Because letting those positions run to the target, right? So if you're experiencing a lot of back and forth in your trading, a lot of times it's because we haven't let our trades run, right? If we're patient and we work hard to mark up our charts, to find these setups, and then we don't let them run to our target, right? It causes us to get whipsawed back and forth in our trading experience. Why? Because these type of trades, when you let them run, these are what compensate for your losses, right? Because we're gonna walking up to the plate, and we're going to keep swinging, right? We're going to keep swinging, and we're going to miss, and we're going to miss, and we're going to miss. But when we hit, right, we have to make sure that we let our trades run so that when we look at our numbers, right, at the end of the year, end of the quarter, however you judge it, that we come out on top and that our edge plays out, right? So we're not letting our 3-to-1s run, our high 2-to-1s run, right? We're gonna end up around break even or losing money, right? Getting whipsawed back and forth because we haven't let our good trades run to their profits, right? To their profit targets, but we've definitely let our trades that we lose run and hit the stop. You see, so the only way we come out on top is if we let our good trades run into their target. All right, makes sense to everybody? Yes, no? Reese, I know. I constantly, when you hear me reminding all of you, is because I have to remind myself, right? So, I go through it as well, and then when I look at my data, I'm like, man, these losses, it seems like I'm taking these losses so hard because I'm not letting my winning trades run to their target. Right. So it's looking like these losses are having a major impact. Even if you're risking, hey, 1%, 0.5%, 1/4%, right? You're feeling the pain, that extra pain, right? That knife is extra deep because we're not letting those winning trades run, right? Remember, you could get away, right? If you're constantly being patient and waiting on 3-to-1s, you could lose 70% of your trades and make money. It's hard to believe, right? But you can, right? Okay, you say like you love that analogy. Awesome, right? However, we have to make it click and make sense in our minds, right? That's what it's all about. Okay, so just remember that, right? This trade is still running. So this trade, right, off that 61.8 zone, this trade is up over 1,000 pips. Right? So you're not feeling that 100 pip loss, 150 pip loss. You're not feeling it as much. It's just a blip on the radar when you're letting your good trades run. And it's tough. It is. Your 15-minute and your 15-minute Apple played out. Great job. Drops the sevens in the chart, right? Went over that setup yesterday. Congrats. That is huge. All right. Doesn't matter the asset class. Thanks for sharing that. All right. So teamwork makes the dream work. Good job. So that's your switch in. Continuing to run. Um, and here's the thing, everybody. With the yen, I was talking to Ryan yesterday, and I was talking about how one of the traders that we follow, Kathy Lean, was showed a macro chart of the yen, and you just see historically, right? She had a chart that went all the way back to 1971, right? And on the yen, and you could just see that uh, the yen from that time had just been on an enormous decline to the downside, the Japanese yen. So going all the way back to 71, right? But now what you see is, right, the dollar yen, like price, this is the dollar yen. Price is like right here because the question had become like, how high can it go? And the whole point in showing that chart that dated all the way back to like 71 on the dollar yen was that it can actually go a lot higher, right? It can actually go a lot higher, right? So that U-turn, right, has actually been the short-term move compared to that long slide, right? So it could continue to go higher, that dollar yen, right? So, but what we're looking for is not necessarily a trend reversal and a long-term continuation to the downside, but we're just looking for when that next correction is going to come on that dollar yen, right? And we watch that because the dollar yen, right? The dollar is the world's reserve currency, and it's putting a lot of pressure, right? A lot of pressure on currencies around the world because of how strong it's been as it's approaching some key levels, the US dollar. So that was just an example that she was showing that it could definitely move higher.
It's like that all the way up, basically. Yeah.
Right.
Yeah.
So that's that. So moving on to the Euro Swiss. Right. So this one, right, was an earlier miss, right? But it came in. It's amazing how the fibs work. So we were tracking it from the daily and how we always talk about, right? The different time frames and how deeper corrections, on a higher time frame can cause fibs to be taken out on the lower time frame, right? So the that holds true, right? So when you look at the weekly here on this Euro Swissy, you can see how it retraced, right? Coming off this low now. So we'll zoom out and look at this overall swing, right? And this is funny because we just talked about that dollar yen from 71. And this is kind of what that dollar yen chart looked like. So if this up here was like 1971, it was just like that this trend. And then now you're seeing, right, price reverse out. So here we are, right? We came in and we put in this low, which is the lowest point on this Euro Swissy. And if you all remember, those of you that have been trading with us from the beginning, you all remember, right, how even before the war had broke out with the Ukraine and Russia, we had already parked in this crown pattern, right? So those of you who knew it won't remember it, right? Because it had already played out. But then, we already had this technical pattern drawn, and we were trying to figure out, like, man, what would continue to cause that euro to push lower? Well, then the war broke out, right? And we got the completion of that crown pattern, right? And we put in that low. And now we're trying to see against this Swissy, right? So we know the ECB has had a rate cut. Swissy has put in 2 cuts. But right now, right, we coming to a key level, okay, weekly, and now we're getting a bit of a bounce. We'll see if that can sustain itself, right? But that's how I have it drawn up right now. And whereas because of that deep correction on that weekly, it actually failed, right? It took out our low, right? So that was one that I missed. And then we're moving higher. So the question is, do we continue to push higher, right? And eventually take this A out here, right? So if we just looked at this as support and resistance and cleared these out, right? So let's get down to the nuts and bolts of the thing, clean it up a little bit. What you see is that we put in a low and we've pushed higher and we're sitting above some key levels, right? We're sitting above some key levels. So right now we're going to project for that to continue to move higher in the zone. Yes, we have some down fibs running because look, that's crazy bearish momentum. But look how we put in that low and we've since started to recover. So when we come down to this Euro Swissy on the 4, right, we have marked out that key level. Hey, if we get above, right, that zone is how we have marked it out. Seems like a while ago now, but you can see it did just that. It pulled back, and we've got this continued bullish move. So we should come into that D extension there at 96.28 on the 4, and then we come down to the 1. You can see that because that major downtrend, it created what? An 80-20 type scenario for us where we parked at that 118 zone and we reversed out, right? We reversed out higher. So I'm going to look for this to continue to move long for now, right? Provide some clarity just to continue with what we did on the daily, and we're going to continue to track that higher.
Benny, on the monthly level, it's coming into a D extension. I don't know if you saw that.
On a monthly,
Yeah, because they had 786 retracement. So
let me move out to, matter of fact, let me just because that's not a high. That's not a swing high.
I don't know, it wouldn't do the fib from there, yeah.
Yes, it's not a swing. It's not a swing high. So there we go. Gotcha. Right. So you're talking about here where it hit?
Yeah.
Yeah.
Well,
Yeah.
mine's look a little different. My capital fib shows yeah, you're right. But the smaller fibs in there shows 32905 a fib. The smaller fibs in there shows that it's coming into
Right here.
the extension.
Yeah.
Yeah.
I see. I see what you did. There. Right.
Yeah.
Yeah. Mm-hmm. Okay. So we'll see. We'll see what it wants to do. See how it. See how it plays out. See which one takes over. Right. So, we shall see. There we go. We'll see, right? So we'll see how far if it wants to push. Then maybe over the long term, right? Once it continues making its run up to the upside, maybe over the long term it does turn over, right? And eventually taps into that. I don't know what happened there. Taps into that to that D extension over the long term. So we'll see. Appreciate you bringing that one up. So we'll see eventually with the euros as these fundamentals play out as they continue to be data dependent. Right? If they move forward with more possible rate cuts in the future, then we'll see if it eventually turns over to hit that monthly D extension, right? But right now we're correcting to the upside. All right, moving on to the pound Swissy. So if we look at this, right, we are starting, we're trying to, right? We won't know for another few weeks, but on a weekly level, we're trying to put in a low there, right? And so far this week, we are moving bullish, right? Pretty much across the board against the Swiss franc. You can see here where we are sitting, right? We put in a low right there, right? So pretty much we've double bottomed, right? For the most part, because that wick didn't close below that 112 level. And we're pushing up. So we want to see if we can get a continued push to the upside. And this was our play from before, right? So we almost closed in on that D extension, right? This is when I got knocked out right after it pushed up so high, then turned over because it moved to stop in the profit. But now, right, we are back down and we are trying to reverse out again. Right. So this has been a wicked move, but we stay within our AB boundary and we are swinging long right now. Right. So you can see here where we got an enormous, right, bullish move on the 4, right? And then we pull back and then we continue long, right? So for the pound Swiss, you see that candle all the way up to its high price is almost 100 pips to the upside. And then we pull back and then we've continued long since then. 4-hour stochastic is in a buy zone, right? We put in another low here. So I would love to see this pound Swissy continue long. Moving and take a look at the 1. Right? You can see how we've broken the trend line and we've continued to move long. So I want to see it continue to make gains. I'm sitting in a long position on the pound Swiss. So let's see what happens. Let's see what happens. Any questions on the pound Swiss? Nope. All righty. So let's see. Okay. If we could get this move to play out. All right. I don't know what the fibs are doing. There we go. Okay. See if we can get this move to continue long as we've broken that down trend line. See where we are in relation to the cloud on the 1. Okay. So trying to push long, right? Looks like it may want to move sideways a bit, but continue to track it along. So far, so good. So I'm gonna stay attached to that position. NZD Swissy. Okay, this one is starting to make some progress as well. Right. So here we are on a daily. Okay, got a 50% pullback, and you can see where we're stalling. We need to break out. Okay. See these candles moving sideways at this level. We'd love to see it today break out above that 54.71 and continue to get out of this range. Right, to get out of that range. And so here on our 4-hour, yeah, and we can see this was an old 80-20. Okay. Pull back to the edge of our buy zone. 4-hour stochastic. Okay. It's looking bullish. This is that range, right? You can see it more on the 4. We need to push through that to continue, right? So we've got a sub-fit running on it. But you can see where we pull back to daily support at 53.99. And right, so TP1 was hit on that, and now we're seeing if we can continue this bullish move to the upside on the NZD Swiss. Here we are on the 1 hour with the cloud, again, choppy, right? So the cloud really becomes a mess, right? When price moves sideways. Okay. So we'll switch that over. And we want to see if we can get this price to break out. We broke the inner trend line. Can we get beyond, right, this outer trend line, or do we push deeper? And so just going to continue to let it run, see what happens. Any questions on the NZD Swiss?
No, sir.
All right. So moving on down to the dollar Swiss. All right. So I am overall right long on this dollar Swissy. Okay. So the market tells me otherwise. So we've got a bullish move on the daily, right? That is moving up. Okay. So long, right? And then I'm playing off a dollar strength. Okay. We've got the Feds holding rates. Will we have the ebbs and flows? Yes, right. Will we have some data that comes out? Like we've got data towards the end of the week. We've got data today with GDP numbers. So do I expect pullbacks and things like that? Yes. But I want to continue to hold my long on this 4-hour that we've marked up. right? So far, that's good. Is in profit, right? Not sure if this is above the cloud yet. Let's see on the 4. See how we're trending. It is, right? So we got that break, not above our 200 yet. We've got a daily level that we're coming into, but I'm just gonna let that run, let that do its thing, right? Do its thing, right? Because I need that to get long, to stay long. I need that 441 pips. Remember, because why? We're gonna have losses along the way. We're just going to, right? So we need to let our trades run. Here we are on the 1. Right. So do we pull back? Right. We've got data, GDP data. Let's see how it comes out, see which way it pushes the market. Do we get a pullback and a continuation? Okay. So larger waves, smaller waves. Let's see what happens with that. Any questions on the dollar Swiss? Okay. No. So, just continue to, right? Use your risk management. Calculate your risk for every trade. Just don't jump in the trade. Wait on your sweet spots. If there's nothing available, there's nothing available, right? You have to be patient. You have to wait. But when you see that trade hit your zone on whatever time frame you're trading, go ahead and make the play, right? Go ahead and make the play. Because when these longer term plays run, right, as this is running, right? And if this trade continues to go my way and some of the other trades that we're in, if they continue to go our way, then guess what, right? We're going to be accumulating pips, right? Our account's going to be growing, right? Yes, we're going to have losses along the way, but you know what? There's going to be new opportunities and we're going to be parking positions in, right? Putting in those new positions, right? And letting those run as well. So it's just a constant, right? Tallying and collecting of pips. Okay. So that's the dollar. Swiss, want to take a look at this Euro USD short that we've been involved in. Some of you may be, in and out of depending on your time frame that you're trading. But we are overall, right, bearish on this Euro USD, and it's continuing to move down. I tend to move between that four and that 1, right? Looking for setups and scenarios. Reese, that's a great question. I tend to follow that 4 hour and that 1. Primarily, I love trade setups on the 4, right? On the 4, but the 4 and the 1. And the daily, like if I see a major low getting parked or a major high on a setup like this Euro USD, right? On the daily, like this one started out on the daily is where I identified this, you know. So a lot of times, like if I'm working from that higher time frame down, Reese, a lot of times for example, like this Euro USD, right? Spotted it on the daily. And then, as you work your way down to the 4 and the 1, like for example, if I go down to the 1 and I see a good pullback to a sweet spot, right? Say this pulls back on a 1 hour to a 61.8, there may be an opportunity to then add to a trade that initially started on the daily. So that's how I typically look to play it, right? I like that. I like when the sweet spots are hit on the higher time frames because then I can use that lower time frame, like a 1 hour, to add to that position, right? So you can see here, there's been corrections and pullbacks along the way. You know, that's just how I typically do it. 4 and a 1, definitely. You know, but this one here was because of the distance. I'm like, here, what was that? So when you look at that Euro USD, like that's, you know, like I could play that. That's 157 pips or whatever. Like and then we pull back to a 786, so we got a target downside target there. So and then the fundamentals just seem to be aligning, right? So we've got the dollar holding rates, right? So that's off that 61.8 there. It's over 330. I didn't park a position at that 786 though, and it pulled back. So that's 393. It's just like the fundamentals for this one are just making a lot of sense, right? Whereas the ECB gave us the ECB gave us a cut. The United States is holding right now based on the data. We're looking at another possible rate cut for the ECB based on some of the fundamental data that's coming out. So this just makes sense to look for a continuation to the downside. But you see here like this 4 hour, and I like those time frames. Still, yeah, I'm short. I'm short on this euro-dollar, right? And I know K is still on it off the 4. So still holding short because with the higher time frames, I don't have to be in and out of the market as much. I can just let this run to the target and then look to maybe add to the position. So this one here, you can go down to your 4 hour or whatnot to see if there's a smaller wave that's occurring that you can actually add to your position and just continue to compound that trade, right? So that one, see how it's kind of moving sideways. So this latest move, right? We look for that to continue to move down. There's that target there. See what I'm saying? So, for example, if this was to move down and hit a D extension, right? And if you had another fib form and you got another pullback prior to that main target being hit here, like that, you could look to possibly add to that position. Okay. You could look to possibly add to that position. And you can enter, you could trade that way. So a trade that initially started, right? So look at all your fibs. So coming off of that daily, right? That range that we were stuck in forever. Coming off of that daily, look at how many fib sequences we've had where that price has pulled back. So if you, let me see, I think I already marked it, but here at the 61.8 level. Like so. So you can see here off of this initial entry, right, where you've had a pullback there. So that's an opportunity to add to a position, right? And let that finish out. Then if you pull back, you can add to the position. You see what I mean? So you're doing it all within one large move, right? One large move, and that's just where fundamentals and technicals come into play, coming together. It's just like, man, I'm not gonna I'm gonna look at these pullbacks as just corrections. I'm not letting it scare me out of the market because fundamentally it just makes sense for this to continue, right? And then you can start to slide and adjust your stop on the way down. So you can see, for example, here, right? If this finishes out, then you see how this stop is already in profit. You could just continue to manage that trade with your stop manually all the way down. So if you do get some type of crazy reaction in the market, if it stops you out, then you got stopped out in profit and you've gotten, right, the bulk of your move, right? So whereas your stop, started up above, what was that level? Right? 109, right? That stop now on your lower time frames, if you're tracking those fib, just continues to move down to where you're locking in your profit, utilizing those smaller waves on that 1 hour chart example that we were showing, right? So then it becomes, it eventually becomes just a risk-free trade, on the way down. And it takes a lot of patience. It takes a while to get there. It's still something that I struggle with from time to time, because the thing that'll wreck you psychologically with swing trading is that you will be in and out of profit, right? And as you're trading a larger and larger account, you have to get used to seeing like, man, I was just up $600. Now I'm up $100, you know, but you just have to hold your position, and stay strong in knowing that, okay, this is my trade idea. I'm going to let it run. And will there be trades uh, where you're up, a good amount, and um, price retraces on you, and you get stopped out, or you actually lose the trade because maybe you haven't been able to adjust your stop yet, or you didn't feel comfortable adjusting your stop, and you get stopped out and you lose it. Yes, that'll happen. Um, it'll happen to you, but you just trade through it. I've been experimenting with dividing my risk into two positions. Want to pay myself along the way. Yep. Other run to take profit. Yep. Yeah, you can get out. You can reduce your trade. So, for example, Reese, right? So initially, right, we can always, especially if we're using limits and things like that, limit orders, okay? Which a lot of big time swing traders, that's what they do. They use limit orders. So, you know, at some point here in April, you got a new AB boundary to form, and you said, hey, I'm gonna put a sell limit at these levels, and we break down. Now, when this price reverses out, and I'm just using this daily chart, this 4-hour chart. This can be on a 1-hour chart, however you want to do it. But you can set targets where you reduce your trade. So, for example, we know a B boundary is a key level of support. You might say, hey, I'll reduce my trade, a part of my trade at the B boundary, right? Pull some money off the table, Reese. Then you may say a natural level where price loves to react is this 118, 127 zone. I might take another third off there, right? And then let the remaining third run to the D extension, right? This is a different scenario because we got a 786, but if we had a 61.8 pullback, for example, you may say be boundary, I'm gonna take something off 80-20 zone with that 127 zone, which is an 80-20 zone the other way. I may take some off, and then I'll let that last third, right, run to the extension. Or like you said, divide it into two, right? So maybe my first target is the 127 zone, and then I'll let the rest run to the extension. So just something to think about, because that can help with your psychology, right? You want to close out positions. If you really struggle with like, man, that trade's bouncing back and forth on me, I'd feel better if I can secure the bag a bit along the way, like you're talking about. I think that's a great idea. I think that's a great idea. Yep. And I'm gonna watch this video every day for 1 hour to get printed in and your brain says, I know, right? Repetition is the mother of all skill, and it really is. And it takes time. And that's why there aren't too many overnight successes in trading, right? It appears as such when somebody does make it, but there's a lot of work, a lot of times that went on behind the scenes, a lot of winning, but also a lot of losing, So that's the euro dollar. So we'll continue to let that position do its thing, right? And so we can't be scared. Like, for example, you may get GDP that comes out today on a dollar, and it may be a weak number, and you may see that price push up. That's okay, right? Because overall, the fundamentals haven't changed, right? In regards to changing my directional bias. Okay. So I want to take a look at, because the Aussie yen, that one stopped me out on a 80-20 play because of the fundamentals that came out for the Australian dollar. So that one just continued to push price long. But this CAD yen Continue. So on the 4, this is what we're looking like. It's struggling at these resistance levels, this daily and this weekly resistance level on the 4. But this markup that I posted on the 1, this one's still intact. It's having some issues again at this level. This is a 75 pip stop at the D extension. If you're using confirmations like trend line breaks, cloud breaks, you haven't really gotten anything yet, right? But in regards to it approaching that stop, it's struggling at this level and is bouncing back and forth. Our 1 hour stochastic is approaching the sell zone. So still waiting on this one to see if you're not involved in it, because it's pushed so high in the zone, you could draw you some trend lines. Or if you're using the cloud, use the cloud. But if you just wait, because it's pushed so high, it's pushed beyond that 118, 127 zone, to now you've got time, whether it's on this time frame or a lower time frame, if it wants to reverse out and make a move to the downside, you've got time for that to push lower, right? And then pull back like so. See how it's pushed beyond that 80-20? So now it's a wider distance now between where it's at now and that TP1. So if we do get the bears to come in prior to that extension, that stop loss being hit, you've got time to let this kind of push down, right, to give you some more evidence and then pull back, right? And then maybe take that position, okay? So what'll happen is you'll end up having a sub fib. And if you're already in it, right, then you're just letting it run to see if it wants to reverse prior to hitting the stop. If not, you lose 75 pips on that move if you're already in that and you're in drawdown, right? So we should know that if that 75 pip stop loss gets hit, hey, I'm out quarter, half, 1% or whatnot, right? No biggie. You just keep trading through it, right? Because we've got larger trades running, right? And the machine keeps moving along. So that's the CAD yen. Any questions over anything that we covered today? No?
No questions.
All right. So just remember, right, if you're trading those larger plays, right, it takes a lot of patience for them to get going, right? So you drip your position in, and then when it gets going in the direction that you need it to go, you can always add to that position. So maybe you're in at that quarter, that half, that 1%. But once it starts moving, in your direction, see that pullback there? See how that's moving down? Once it gets moving in your direction, then you always have other opportunities to add to the trade. So you don't have to, you can scale in at a 0.25%, and work your way up to 1% off of pullbacks, right? So you could be in a total of 1% by the time it's done, right? Or maybe you put in, 1%, and then you're looking to scale in at another, quarter, half, or 1%. So maybe you're in at a total of 2% overall in the position, right? So I hope that makes sense to everybody. So, if there's any lesson from today, is that, right? Because these are longer swing trades. No market, unless there's a crazy fundamental occurrence, just moves straight up or straight down. It's going to move in waves, and you can utilize those corrections and those pullbacks that are oftentimes caused by those smaller fundamental data reports, like a GDP report, like unemployment numbers, like that can create a correction in the market that gives you an opportunity to add to your position. All right. Ryan, anything before we close out, sir?
No, sir. Great session, man. Appreciate you.
All right. We'll see everybody tomorrow, 6:30 a.m. Eastern Standard Time. Enjoy the rest of your day. Don't just count your pips, but also make sure that you count your blessings each and every day. Bye for now, everybody.